Good morning, traders. This is Captain Jim James with your daily brief. I hope all of you were able to sleep in this morning and get some rest after the wild day we had yesterday. I'm going to keep this one short and to the point. There is one other topic I'll talk about, and that's just about entries and exiting, how to enter and exit plays so that they are all, well, not always, but mostly going in your direction. First up this morning, the ADP numbers are not expected to be material. All eyes are on Friday. We absolutely know that from yesterday's action in ES and the SPY and SPX specifically. The CDC reinstated the eviction moratorium. And whether that holds or sticks, or the devil is in the details on that plan, it doesn't really matter. What matters is that it is hope for people that are affected by the pandemic. The infrastructure deal is back on the table, and we're basically only missing another stimulus check. Now, I know earlier in the week we talked about those things being off the table and that they can be back on the table at any time, and that's just what happened yesterday. So this is probably a pump for bad numbers on Friday. We also have the 10-year down yesterday. That was a second tap on lows on the 10-year. So I would expect that they're going to try to pump this up for the rest of the week. The Fed did show its hands yesterday. You can call that bid on SPX and SPY and NASDAQ, whatever you like. But surely Apple was bid up, Amazon was bid up, as well as the major indexes. So at this point, we do know that 436.10 is the no-go zone. Now the market, and I want to stress this again, the market likes to go in the path of least resistance, where the sellers are, or where the buyers are. So I would expect today that we either go sideways in this established trading range that we have, or we make a move up. We will probe higher numbers. Now, when we sold off back here on July 26th and July 29th, most of this here is due to fear of being too high in the market. After being told yesterday, nope, we are at the bottom of the market over here at 436.10. The next logical step would be to build up a push for higher numbers or to go straight there to new all-time highs. Now, we did do this last year in 2020. So don't be putting out that shocked Pikachu face if we do that. I just said doo-doo twice. No shocked Pikachu faces if we start to look for this higher 440.44 or 445.59 and attempt to push it even higher. Some people are talking about 450 as a price target now. Last night I made a video and I was showing the bearish flag turning to a bull flag, and I kind of got my lower support. I'm going to get rid of that one. I got my lower support kind of wonky. What I really wanted to show you was this part of the bull flag that was developing as of last night. So we're going to put this one in again one more time so you can see it. And there it is. When I showed that SPY chart last night, two different SPY charts, it was actually this one right here. So this white flag here has now turned into a very bullish setup. The question is, where do you buy in? Do we gap up immediately, take a rest, and shoot up? Or do we come down here and bounce off of, let's say, 438.01? That will be decided today. I can't predict the future on that. I would not expect us, though, to trade below this 437.90 number. And I am not bearish until we go below 430, or today, it would be 435.95. Unless we cross below this number, I'm not bearish. Now, I have had some bears tell me that they got burned or upside down yesterday. One thing you have to consider, whether you are a bull or a bear, is when you are beginning your positions. You can see here back on the 27th, again, or let's say the 26th, if you were a bull, this was a signal to go long. Same here on the 27th. And somewhere down here, which you would have missed, but we should have known that we were headed in this direction on the 30th. Same thing goes as a bear. You should be grabbing these tops here to come down. So that same would hold true for today. anywhere from this 440 to 442. Now, we did have a momentum change here yesterday, which leads me to believe that at the minimum, we will attempt to tag this 442. So consider this area here no man's land for bulls and bears, and this area here no man's land for bulls and bears today. Another issue is what exactly are you grabbing? If you are grabbing put spreads, they're very safe, they're much safer, and you can go outside of the money. So if you were to grab a bear put spread up here, let's say 441, they're not going to burn even if we bump up into this area up here, 442. When the same goes for bull call spreads over here. Now, if an established trend develops, let's take a look at the 5-day. You can see down here we did bounce off 436.10, and you can see clear as day bull flags. You should be looking for 1, 2, 3 taps and grabbing these bottoms here if you're going to be playing FDs or weeklies. The same goes for bear flags on the way down bears. Now, one more thing is this. When I enter my positions, and you should too, your position, wherever you're grabbing them, should, within the first few minutes, maybe 15 at most, be going in your direction. Let's say up here, you're seeing a bull flag here. This is on what, the fourth, I think, the second. Let's just pretend we thought this was a bull flag. You know, let's say we're day trading here and we're saying to ourselves, hey, this thing is going to break up. This is a great example right here, especially for bulls. You know, let's say we open the day and number one, we're at 11:45 in the afternoon. We already know that the middle of the daytime, stocks and ETFs tend not to go up. People take lunch, right? We talk about that every day. Now, that joke is about exactly that. That's your first key indicator that we're not climbing in the middle of the afternoon. The second indicator would be if you were to buy here and it falls off. Now this you could do this in the inverse as well. If you were a bull, or excuse me, if you were a bear and a bear flag fell off or started to climb, if your trade is not going your direction, you need to wait for the first bounce back up and get out of it and rethink your timing of re-entering that trade. Had you been a bull here, stayed in this trade, you never would have recovered from it. It would have just kept burning you and burning you. Now, even by coming back up here a day later, so much time has passed and the intrinsic value of whatever option you had purchased had also burned off with time decay. So there is no real recovery had you bought calls in here to this point. It's possible you would have come to maybe a 70%, let's say you get 70% of your money back, especially on FD dailies that are FDs or weeklies. Now, if you had bought a monthly or a 3-month contract, yes, this would recover, but it's most certainly not on these short-dated call and put options. So when you're playing a stock or an ETF on these short time frames, ensure that the movement is going in your direction immediately. Now, even then, let's say you are playing FDs. Let's say you're playing an FD on yesterday, a call FD moving up into this close. These are still going to lose their extrinsic value as they start to settle in. Let's say you took an FD down here. These printed huge yesterday, by the way. I want to say they were 4,000 to 10,000%. Some of them, they still burned off their value into the close yesterday. So your timing is crucial. You need to be entering these trades, winning immediately, and then selling the moment they start to lose their value. And especially yesterday, if you had done 8-4 call FDs, you would have ridden this up, sold, been ready to buy here, and then sold, been ready to buy here, and then sold up top. Weekly, you're probably safe on a weekly on this trade right here, but any 1-2 day trades, you should be in and out. And don't be believing the profit calculator is going to tell you that you would be safe. You will not be safe on any of these 1, 2, 3, 5 day options with no intrinsic value. They are only good for the run that's being made. So if there's big movement, you're going to catch that lightning in here. If you want the safer play, I always recommend bull call spreads, or you just buy yourself. If you think the general direction is up over a couple days to a week, you can still buy yourself a month out call option or a month out put option and have some defined de-risking or some defined stop loss, 10, 20%, if the trade is not immediately going in your direction. I almost never hold positions that start to lose more than 10 to 20% unless I think that they're fishing for a lower bottom. If they are fishing, or if it looks like they're fishing for a lower bottom, I'm entering a position on an ABC pattern. Let's say it starts here. I'll add more here and then add more as we continue up. Let's say I'm betting 10% of my liquidity. I'll start with 3% here, 3% here, and 4% here. That averages in my position. It gives me the time to confirm the direction of my trade, and it also allows me to cut my losses down here if we break through this support level. So just keep that in mind. If you don't understand these mechanics already, I am going to recommend that you stick with learning, just stop trading for a day and spend some time learning how to execute basic bull and bear put call spreads. There are some great videos on YouTube, one of the best sites that I know to execute these trades and to actually learn some of the fundamental basic mechanics. Check out options.ai. I'm not affiliated with them. Don't ask for an affiliated link. But even if you don't fund that account, you can run through the process of executing one of those plays and then transfer that play to your favorite broker. So you've got my call for today on the SPY. I am bearish below 435.95. This is a no-go area for bulls and bears, 437.84. I am bullish above 440.77, 440.94, somewhere in there. Although I am looking for some confirmation at 442.49 for a push up to 445.41. There are some bulls saying that we're going to try to jump over this trend line and start trading much higher. Does that hold past Friday? I don't know. I think that that's possible. We're going to jump up here so that whatever bad news we've got coming Friday and possibly into Monday is lessened so that we don't break past this 430 mark, let's say, that's increasing each day between now and Monday. Moving on to NDX. Yesterday, NASDAQ was looking very bearish. Well worth selling the tops here. And this is where you should have taken a bearish position. This was on the 2nd, not yesterday on the 3rd. You wouldn't be taking this bearish position here until we talked about breaking 14,800. My position remains the same on NDX, although we did jump above resistance yesterday. My expected daily range for today is 15,007 to 15,128. I am expecting us to try to push up and bounce around in this trading range and do some consolidation. If we do get above 15,128, the next place you're looking for would be 15,196 would be the next resistance. So trading somewhere in here if today turns out to be bullish. If you're bearish on NASDAQ, you are most certainly looking for a break below 15,013. Although even if you break through here, I doubt you were able to penetrate this 14,800. That's probably being saved for Friday or Monday. Moving on to the IWM. The IWM is definitely turning into what we've been talking about for the past week. All this is known at this point. We are within a range. You're looking at the upper part of the range is 22.3.56 and the lower end of the range 215.72. Right now you are in no man's land. I would expect tight trading within this for the rest of today. Let's call today a high of 221.63 and a low of 218.45. I wouldn't expect too much out of IWM today. What you can do is find yourself a volume scanner on the internet and find out which stocks are running or which stocks are dying in the small caps today. Also, Twitter, Wall Street Bets, whatever your favorite social media is, you will see these names pop up throughout the day. All right, I think I got it all on that, right? Now let's move on to Tesla. I know the Tesla gangs and Tesla Q is probably wondering what's going on in Tesla land. Nothing has changed in my overall viewpoint of Tesla. I still want to reinforce to you that this move here was 12%, and we are seeing some consolidation here in Tesla. The market has proved itself to be bullish. For trading it today, if we are bullish today and you're trading it today and want to go long, 705.37, if that holds, expect to move up. Though I do think that Tesla somewhat moves on its own, I am still looking to go long down here around 672 for my own personal trading. I always like to see Tesla come back and rest for a little bit before it makes its next move higher. There are times in the past where we skip this move down for consolidation, and we will rip much higher. If we do move much higher today, you're going to be looking to buy again, as I said earlier, somewhere around 705.37. You're going to be looking for sellers at 726.35. And then a major resistance up here at 740.52. One more, just to harp on this once more. I always like seeing Tesla come back to consolidate. If you're a real Tesla bull, I guess, you should as well. When you see this strength down here, this provides a base for maintaining price over time. If you want this to shoot up, let's say to 800 this week, this will create a giant gap that on the first bad news or FUD that's sent out, Tesla's going to crash. You want to be creating, they're not bag holders, but this is bullish sentiment here. These are people that are holding for the long haul on Tesla. So I would expect that we're going to come back and hopefully maybe retest down here at some point, if not today, in the coming month. So my call for today is, if you're feeling froggy and very bullish, if we tag 705.37, you can take that run up to, let's say, 726. The risky play would be 740, or you wait for it to come back and go heavy long to 800. Hope you all have a great day trading today. Please like and subscribe. This is the way for me to know that you guys like these videos. Please find me on Twitter and reach out to me if I can improve these video briefs, or if there's some more you'd like me to see from me. I am going to try to add in a live stream on Saturday or Sunday mornings, maybe 10 a.m., 12 p.m. Eastern Standard Time. If I do it at 12, I can grab the West Coasters to come join us, and then maybe I'll add one more video every week with plays, maybe 5 to 10 plays to keep on your radar for the upcoming week. Maybe I can do that on the other day. Saturday, I could do some stocks to consider for the following week, and then on Sunday we could do a live stream so that we could discuss all kinds of stuff, whatever you guys are interested in discussing. Anyways, like and subscribe, please. Have a great day, and hope you guys all make money today. Good luck.